So, good afternoon. Welcome to Cherokee Acquisitions webinar for Celsius and Voyager Creditors. My name is Bradley Max. I'm with Cherokee Acquisition. With me also is Vladimir Yelsavchik from Cherokee Group and Brian Ferrara. The purpose of today's webinar is to assist creditors in these cases and provide our perspective as investment and trading professionals as to the major issues that have developed in the case and those issues that creditors are concerned about. And to that end, we're going to be having a large portion of today's webinar as live question and answers so that we can address any pressing concerns people have. This will not be an hour-long sales pitch for Claims Market. That is one of the Cherokee products, but today is really an informational webinar to assist creditors to better understand the bankruptcy process as well as the things that they hold. By way of background, I think it's important for each of us to provide a very brief history of what we've done in the space. Personally, I was a bankruptcy attorney for more than 10 years, and for the past 20 years plus, I've been on the buy side purchasing bankruptcy claims and other kind of distressed and stressed financial instruments with a focus on bankruptcy claims. Vladimir, do you want to give a good background on you?
Sure. Yeah, so I'm trained as a CPA, went to law school. It's been about 6 years at an investment bank, and then spent 17 years in independent hedge funds running institutional capital. And we formed Cherokee in 2016.
Hi, everyone. My name is Brian Ferrara. I've been working with Flag and Grad since about 2014. I am a sourcing specialist here. I help creditors receive early cash payments on their bankruptcy claims. Sorry, everyone. My name is Brian Ferrara. I work with Flag and Grad here at Cherokee. I've been working as a sourcing specialist since about 2014 with the Cherokee team. And we work together to help creditors receive early payments on their outstanding claims.
Great. Well, and the attorney in me kind of feels like I need to provide a disclaimer. We're not here to provide legal advice or investment advice, simply to convey our perspective on bankruptcy claims and the bankruptcy process. To that end, Brian and I in particular, and Vlad said to a great extent as well, have been on the message boards, identifying the questions, concerns that creditors have. But one of the big questions people have is what is the automatic stay and how does it fix their claim in the bankruptcy case? Brian, do you want to kind of elaborate on that?
Yeah, sure. Thank you. So as of the petition date, basically, all of the debtors' accounts are frozen, stopping creditors from going after the debtor for their payments. And obviously, Celsius filed on July 13th at approximately 10 p.m. That's why currently we are basing the face value of creditors' claims as of July 13th at approximately 10 p.m. Based on the coin price of the coin market cap.
Right, and the fixing of the amount of claim does not fix the amount of recovery in the claim. It's just identifying the amount of the claim that we're going to have.
Exactly, and we're basically using that as the minimum payment to base the purchase rate off of that.
Yeah, and just technical notes. So some of the people are asking questions about audio quality. So it's being worked on right now. I see a question about will there be a recording of this webinar? Absolutely. In about a day or two, we'll make a recording available on the Cherokee YouTube channel.
Great. And so, another one of the popular questions, concerns that creditors have is, how and when to file a proof of claim. And, I would direct creditors to the notice of commencement of case, which was sent out by email and regular old-fashioned envelopes by the Stretto claims agent. And you'll see within the notice of commencement of case, it identifies that creditors don't need to file a proof of claim unless they dispute the amount that the debtor schedules that is due to that creditor. And, you know, I would suggest, however, that all creditors file proofs of claim. The reason being is, well, if you don't file a proof of claim, you're relying upon the debtor's calculation of what your claim is. And you can always amend your claim if you feel that things have changed or that you forgot to include one of your assets that might be in Celsius. There's probably little or no downside to filing that proof of claim, and it would prevent the possibility of your neglecting or forgetting to file a proof of claim, and then the debtor might schedule an amount that's not acceptable to you. So I would recommend that you do that. One of the big concerns that creditors have is confidentiality. And if they're identifying themselves on a proof of claim, will the whole world know their home address, their phone number, and their email address? And that's a big question in the case. Traditionally in a bankruptcy case, all that information is made public. And in this case, because of the concerns of the creditor body for confidentiality, as many of you know, there's a motion pending for the court to limit the information disclosed on account of these proofs of claim. So far, all the proofs of claim are being identified confidentially. Names are not being identified, and it's expected that that's the way this is going to proceed. But if ultimately it's required that names and information is disclosed, it's going to have to be disclosed for everybody. Obviously, if you're El Chapo, you might not want to file a proof of claim. But for those people that have claims in the case that they can quantify, most attorneys would recommend that the proof of claim gets filed sooner rather than later.
Yeah, and one additional note on that is when Celsius and Voyager released their Schedule F liabilities at the time of filing, we believe those names will also be redacted.
And then, of course, another concern that creditors have is clawback or preference actions. Most creditors in the case had no idea that in a bankruptcy case such a concept even exists, and it can be very traumatic for investors, creditors in the case. Vlad is our resident expert on the bankruptcy code and all things bankruptcy related. So, Vlad, do you want to comment on preferences in this matter?
Yeah, I mean, it's a huge issue in the case. Based on disclosure made on the bankruptcy docket, there's been about 1.2 billion of withdrawals made from Celsius by account holders during the 90-day preference period prior to the July 13th filing. So typically in financial cases, there's an exemption to preferences under Section 546C, and I can talk about that in a minute. But just for those of you that aren't familiar with the principle, the reason why the issue of preference exists is because the idea is to level set all claims against Celsius with assets that belong to Celsius. So one bankruptcy principle is level setting by potentially returning withdrawn assets that were withdrawn by net redeemers within that 90-day period. So get everyone back to the same starting point. So that's the idea, that people that were net redeemers, that you had $100,000 of contribution in the 90-day period and $500,000 of withdrawals, that's a $400,000 net withdrawal. The idea is just level set, return the $400,000, and everyone starts from the same point that they were 90 days prior to the petition date. That's the general concept. and I'll get into why I believe that will most likely not be happening in the Celsius case. So just one key statement is the purpose of this webinar is to offer an investor's perspective onto the Celsius case. And I believe that the course of the case, the progress of the case, is going to be driven 80% by bankruptcy law principles and probably about 20% by crypto-specific principles. So there are many novel issues in Celsius that will need to be decided by the bankruptcy judge, and precedent will be set in the Celsius case. But that precedent is going to be within the framework of existing bankruptcy law and existing case precedent. So there's a section of the bankruptcy code called Section 546E, and it is an exemption to the concept that net redeemers in the 90-day period leading up to the bankruptcy case have to return their net redemption. So that 400,000 in my example, you put in 100, you took out 500, you net 400, and that's essentially a safe harbor, meaning that if the case qualifies, that none of those non-insider net redeemers will be obligated to return their net redemptions. And the safe harbor is simply based on securities transactions or any type of contract or transactions in connection with a securities contract. So it's a very broad definition. In the case of Madoff, there was a Second Circuit Court of Appeals ruling that ruled that the Section 546E safe harbor applies to Madoff net redeemers that were not insiders during the 90-day preference period. That decision was appealed to the U.S. Supreme Court, and the Supreme Court did not grant cert, meaning that they didn't hear the case, but they allowed the Second Circuit decision to stand. The one wrinkle, of course, is crypto assets are, for the most part, at least most of the assets that Celsius owns, BTC probably are not defined as securities. Many other crypto assets that Celsius owns have a undefined, legally undetermined or regulatorily undetermined status. Having said that, I still believe that 546E will apply, and the reason is that although the law hasn't changed on the legal definition of crypto, the SEC has a position paper out that says that crypto lending contracts, like the Celsius Earn account, according to the SEC's definition, are securities. And that was the basis for the SEC's cease and desist order against BlockFi and subsequent settlement with BlockFi, where BlockFi was required to pay a $100 million fine, half that went to the SEC, half that went to state securities regulators for not having registered its crypto lending product. So I think when the bankruptcy court reviews the legality of the net redemptions, even though there's no black letter law guidance, I think we'll take the SEC's interpretation of the law as applied to crypto facts and conclude that because the Earn account is a securities contract or is a security, that the Section 546E safe harbor exemption to transactions in connection with security contracts applies. So it'll probably take a while to get there, There's going to be a lot of uncertainty along the way. It's not going to be one of the early decisions the court makes, but that's my view as to what the outcome will be.
And then, Vlad, I have a question because, I've been speaking to a few creditors and, what happens if someone wants to sell their claim, but they withdrew some money, let's say, 30 days or so before the case? How would you account for that, based on the face value of the claim? Would that be a reduction or?
Yeah. So a lot of what we do at Cherokee is bring claim sellers together with claim buyers. So we might have our own opinions, but really I think the guidance that we try to provide, the information that we try to convey during this call is really based on the collective view of investors that are out there buying these claims. And so are you referring to like any withdrawal or a net withdrawal?
A net withdrawal.
Yeah, I think a net withdrawal at this point would be difficult for a claim holder who's in a net withdrawal period during the 90-day preference period to actually successfully sell their claim to an investor. Even if the investor agrees with my interpretation, which they may or may not, I think that they look at that claim and say, we're just not sure. Like, maybe 546E applies. Maybe the judge is persuaded that the SEC's interpretation of securities law is correct, but they might just not want to take a chance. And in many cases, they don't have to because most of the claims available for sale are not net review claims.
That's really helpful. That's a comprehensive analysis on preference, which I don't think is available anywhere, online at least, or on any of the message boards. Another kind of concept that I see appearing over and over on those message boards is, a general kind of understanding of the bankruptcy process and how long a bankruptcy case can last, especially for those creditors in foreign jurisdictions outside of the U.S. They don't understand whether a case is going to take, 6 months, 18 months, 3 years, or 10 years. And so, there are a number of comparables to the Celsius and Voyager cases. Nothing 100% on point, but comparables that we can point to as kind of historic data for how this case may proceed. We think the best comparables are probably MF Global, PFG Best, Peregrine, Lehman Brothers, some of the Icelandic liquidations, including Kaupthing. All of those cases were large, complex cases with different financial instruments that had to be sorted out with different types of creditors in the case. Each of those cases, to my memory, took years to resolve, and years for distributions to be concluded. Hopefully this case will proceed at a faster pace. They have extremely competent counsel for Debtors Counsel, Kirkland & Ellis, as well as the Unsecured Creditors Committee counsel, and for that matter, the ad hoc counsel for the custody claim holders at Tug Siegel. And so, I hope that this case can proceed faster than some of those comparable cases. But people should start to understand that, an 18-month time horizon would be shockingly fast, and it could be much longer.
Yeah, I think in the case of MF Global, it took about a year and a half between the petition date and when the first distribution was made to the holders, as opposed to the regulated, subsidiary. So one of the advantages that Celsius has is it has a relatively simple capital structure in that there's no third-party financial debt. So other comparable cases that Bradley was referring to, like MF Global and Lehman, had many different types of debt. So there was bond debt, there was different types of bond debt, there might have been loan debt, as was the case with both Lehman and the Global, and all these intercreditor issues made it quite, complex and thorny. But in MS, it was about, notwithstanding those capital structure complexities, MS Global, roughly 18 months between the petition date and the first distribution. And by the way, I think it's worth mentioning that MS Global not only did it file in the same court, the Southern District of New York, as Celsius, but the judge in MS Global, Judge Glenn, is also the Celsius judge. And currently, Judge Glenn is the chief judge of the Southern District of New York Bankruptcy Court. So he's an extremely experienced, very, very, very intelligent, very thoughtful, very careful, experienced judge. So back to Celsius. So we don't have bond debt, we don't have loan debt. We just had essentially customer claims, and then there's potential litigation claims that are unsecured, non-customer claims.
And Vlad, do you believe, ultimate payouts, distributions will be made in cryptocurrency, or do you think it's going to be U.S. dollars right now? It's
Everybody
a lot of people have been asking me that.
Everybody wants to know that. And so, again, as I mentioned, so I think the way the Celsius case will progress, and the right lens to look at the Celsius case through is 80% bankruptcy principles and 20% crypto. So, so we're obviously aware that most Celsius creditors would prefer a crypto distribution. I don't see any insurmountable problems with that. I mean, the company was sort of transacting in and out in crypto with its customers. It's got that infrastructure. So there's a possibility that there'll be a crypto distribution. However, I think it's very likely that it'll be a US dollar distribution, only because the whole infrastructure of and the experience of the judge, Kirkland, and Alvarez, that's sort of running the administrative aspects of Celsius. And by the way, Alvarez was essentially the outsourced management team of Lehman. Lehman with liquidation, over a relatively short period of time, the large majority of Lehman staff left, and those critical administrative and infrastructure positions were filled by Alvarez staff people. So Alvarez ran, from a sort of nuts and bolts standpoint, Alvarez ran the Lehman liquidation, and Alvarez ran that distribution. And essentially all the Lehman assets, whether they were dollar denominated or foreign currency denominated, so they were assets and liabilities that were denominated in euros, sterling, yen, et cetera. Everything was ultimately, all the assets were ultimately sold and converted to dollars, and all the claims, all the non-dollar claims against Lehman were converted to a dollar, so to a dollar metric or to a dollar reference value as of the FX rate on Lehman petition date. So I think just because of all that precedent and the ease, there's probably at least an 80% chance that the Celsius distributions are made in US dollars.
And we saw a similar kind of result in the most recent round of airline cases, LATAM Airlines, Aeromexico, where you had, a lot of creditors' claims in Mexican pesos, Brazilian currency, as well as, Chilean currency, and ultimately, of course, determined that those things would be converted to US dollar claims and paid, in those cases, in both equity and cash, US dollar cash, of course. And so I'm not aware of any precedent for distributions in the U.S. bankruptcy case and anything other than U.S. currency.
Yeah, that's a good point. Neither am I. I think there were in MS Global and Peregrine. I think there were metals accounts where it was sort of a custodial-like claim where a creditor deposited precious metals, gold and silver. Theoretically, that physical asset that was deposited, theoretically they could have returned that asset, but they didn't. To your point, they sold the metals and restricted dollars. So yeah, so I'm not aware of any exceptions there.
Yeah. So I think we've touched upon some of the major issues that we're aware of out there. I'm sure the creditors who are listening to our call have questions. We'd love to start addressing some of those questions and see if we can't provide a perspective on other issues as well.
Yeah. So IO is asking if there's a U.S. dollar distribution that results in capital gains. We wish we could help you. We're not tax experts, and so we're really not qualified to answer that question. You should certainly consult with your tax advisors to get a professional answer to that question.
Well, and that kind of raises another issue that I see often on the message boards. People have questions that they throw out there, and there's often resources available to people to get qualified professional responses from tax professionals, from attorneys, from consultants, experienced professionals. And I would definitely recommend people, of course, to make themselves known on the message board, but also make the use of the resources that are available. The bankruptcy code, unsecured creditors committee counsel was effectively counsel for the creditors in this case, all of which should be able to provide more concise and probably more accurate responses to some of the questions that creditors have out there.
Yeah. Alex Pack is asking what types of offers on claims are in the market right now.
So, claims market does have a transactions history where people can see, what amount of claim has sold, what type of claim has sold, and at what price. The claims market platform is fully transparent, and you'll see if you log on. There's been about 1.2 million, or almost 1.3 million now, of transactions on the platform, all of which have been earn account claims, which were originally BTC, Bitcoin, or ETH, and transactions have been getting done in the 25 to 26% range, and that's currently where the market is. It's a little unclear where the market would be on a custody account claim. Have not transacted so far, haven't connected the right seller with the right buyer yet, but I think that will be developing in the near term.
Right, and then Alex Pack also went on to ask, how long will it be until there's a distribution on the claims? In other words, how long do they have to wait to get value back if they don't sell?
That's a good question. As Vladimir mentioned, in MF Global, the first distribution on claims was 18 months. In Lehman Brothers, for example, some of the creditors are still receiving distributions as of this year from their claims.
Yeah, I think it's important to mention that that whatever the timing is, that there won't be just one payment from Celsius to Celsius creditors. So it's our estimate that it's about 1.5 years, like roughly 18 months. So let's call it like at some point by the end of 2023, the first distribution, but that's only the first distribution. So no matter what the ultimate value is, the distribution that's made, let's say by the end of 23, that will be the first installment of several installments. And I think what Bradley's referring to is in the case of Lehman, the first distribution was about 3.5 years after the petition date in September of 2008. It took 3.5 years for them to begin making distributions, and then they started making distributions every 6 months from 3.5 years. Every 6 months thereafter, they made a distribution, and that stream of semi-annual distributions went on for years.
And the reason why multiple distributions are effectively inevitable in this case is because there's always going to be claims that are disputed, amounts of claims that are disputed, and counsel is going to reserve funds to satisfy those potential claims. They of course need funds to satisfy administrative costs, professional fees in the case, and so in almost every large case I can recall, there's been multiple distributions on claims in the case.
Right. And then, Milan Delany is asking, what are the risks / benefits of selling my claim to Cherokee now? Waiting.
So, good question. There's no risk in selling the claim. The transfers of claims are governed by the U.S. court, bankruptcy rules, bankruptcy rule 3001-8. Claims cannot be transferred, unless approved by the court. And obviously, that eliminates the possibility of fraud. The benefit of selling a claim is you could take the cash value, the market value of that claim today, and then have that cash eliminate the risk that recoveries could ultimately be lower or take much longer than expected. And you can take that cash today and invest it in a live investment as opposed to having it invested in a bankruptcy claim, which is not likely to appreciate. In other words, if you bought Bitcoin today with the cash that was returned to you, there's potential at least for appreciation to be well and above the ultimate recovery on the bankruptcy claim. And so, selling a claim is not for everybody. It's just like if you own Tesla shares, some people want to sell them to go buy Bitcoin. Some people want to hold them no matter what happens to the volatility in Tesla shares. Same thing with the bankruptcy claim. It's a financial asset that people now hold. It's no longer their crypto. They have a bankruptcy claim. And it's everybody's individual decision whether they would prefer to have the cash today or wait to see what might be paid out in 18 months, 3.5 years, or for that matter, 10 years plus. There's no right or wrong answer to whether or not to sell.
And then RC and Ruben Perez are asking, are we interested in purchasing Celsius loans? I think the question is, are we interested in purchasing claims from creditors that borrowed money from Celsius and have an outstanding loan? And that's difficult because, unfortunately, for creditors, the general principle of bankruptcy is if you borrowed money from a bankrupt company and you owe the money back to the bankrupt company, in general, that loan is still your obligation and you have to pay it back in $100. And if you had collateral in your earn account supporting that loan, that's worth a fraction of the asset value that you put in. So, for example, if you had $100,000 of BTC in your earn account and you borrowed $50,000 in USDC against that, now because of the valuation hole in the balance sheet, that $100,000 in your earn account is worth in the market value and fundamentally a fraction of that. You still owe the full $50,000 in your USD loan. So your obligation to Celsius is for the full amount without any type of haircut, but the value of your earn account has declined significantly. So that's a problem. We're not sure exactly how that's going to be resolved. As you know from the terms of use, Celsius has set off rights, so they can set off the value of your collateral in your earn account. So the old 100,000 that you deposited and earned, they have a right to set that off against your 50,000 USD loan. However, A, they're not required to set off. I believe that's a right they have at their option. And B, because when you contributed the ETH to your earn account, you lost title. It got commingled with everyone else's ETH. It stopped being your property, and because of the value destruction of Celsius, it's worth a fraction of the ETH asset that you contributed. So it's unclear if there'll be a set off, and if there is a set off, it's unclear if Celsius will use the collateral value on the petition date of July 13th, or perhaps a distribution value at a future point, or some other point in time when they actually attempt the set off. So there's a lot of uncertainties as to how loans from Celsius that are outstanding that were originally collateralized by crypto will be handled. As a result, we don't think it's possible at this point to really find a buyer for those types of accounts with a loan balance outstanding, unless the loan balance is very, very small in relation to the size of the account.
And Vlad, another question that a lot of creditors have been asking me is, in your opinion, do buyers care about the underlying cryptocurrency price, fluctuating on a daily basis to value these bankruptcy claims? Because obviously, Ether is up a lot, and a lot of creditors are expecting a higher claim price due to that.
Yeah, people are very much aware of the issue. We haven't seen enough data, so we haven't seen. We don't have clear visibility on bids for, let's say, a USDC, an account that had predominantly USDC versus ETH versus BTC. The trades that we executed on in Plains Market thus far were predominantly BTC denominated earn accounts. Investors are definitely aware of the issue. I have the sense that there's a preference for BTC or ETH versus USDC, but we just don't know enough yet. And that's one of the critical issues in the case is how will an ETH account be classified and treated in the case versus a BTC account versus a USDC account. We just don't know. Obviously, if ETH stays, sort of very high relative to BTC since the petition date, if that sort of price discrepancy continues, then if you're an ETH holder, then you want that value, right? You want that premium. You'd like to be in a separate class that's basically just ETH specific. If you're a USDC holder, you want just the opposite. You want to grab some of the appreciation in ETH accounts and glom onto that, even though your USDC is just a stable coin and just went sideways. So we don't know the answers. We don't know the answers yet, but I think it illustrates the intercreditor issues of bankruptcy. In bankruptcy, oftentimes the greatest threat to a creditor class comes from a competing creditor class. And that's potentially earned versus custody. It's potentially net redeemers versus non-net redeemers. It's USDC accounts versus ETH accounts. It's borrowers versus non-borrowers.
Exactly.
Yeah.
A lot of moving pieces. The one thing, though, is if the cryptocurrencies continue to appreciate, that should enable the debtor more options to restructure and potentially better recoveries for creditors in the case. And so, glad to see that crypto has recovered from, for example, where it was on July 13th at 10 p.m. And I think we recognize that some of the concepts in bankruptcy are kind of tough pills to swallow. And I think, creditors need to get comfortable with issues like preference, issues like the set off on loans and requirements technically to repay those loans. They're all issues that, need to be explored and need to be understood by creditors so that they can understand what they have, what their options are, and what their recovery scenarios may be. And so, again, encourage people to do their diligence. We have a number of questions coming in. Although my eyesight is in here.
Sorry, folks. It's the question screen is a little bit far, so I've got to go around to a different screen. But so Chase Crimin is asking us about our thoughts related to security interest protection on digital assets, and is asking us for our perspective on bilateral non-retail loans and loans that were liquidated by lenders. I think you're probably referring to the Tether loan, where, for those of you who don't know, much of Celsius's loan activity on the asset side, when it was lending out its crypto to third parties to earn yield, most of that was done through DeFi, through various DeFi protocols like Aave, as was pretty widely reported by the crypto media. Celsius paid off those loans to free up their net collateral, and it repatriated that net collateral back onto its balance sheet. So most of the 1.7 billion as of the petition date of crypto assets that it has on its balance sheet were a result of loans that it closed out on its own initiative. There was one large exception, and that was a loan transaction that Celsius had with Tether, where Tether took the initiative and it made a margin call Celsius couldn't meet, and it closed out Celsius's collateral during the 90-day preference period prior to the July 13th petition date. And so it's very clear that that transaction will be investigated, and that Celsius does have potential causes of action. In other words, rights to sue and potentially recover from Tether. So we're pretty sure that's an asset. We don't know enough about the facts. It's likely to be investigated, and where there's smoke, there's fire. There's probably some type of value that will be returned eventually by Tether to Celsius.
And Brad, I have a good question for you coming in from Alex Pack. He's asking, when we list a claim for sale on Cherokee's platform, does that lock us in? Meaning, if he decides later if he does not want to sell it, is he allowed to basically, not sell it even though he wanted to in the first place.
Thanks, Brian. I'm not sure how the audio came across on that question. The question is, if you list a claim on the claims market at a given price, is there an obligation to sell at that price? And there is an obligation to sell at the offered price. We're happy to list claims at somewhat aspirational prices slightly above where the market might be trading, to see if any of the investors step up and want to execute at that kind of price. And if there's a counter proposal to an offered price, that counter proposal becomes 100% an option for the seller. So if you're listing your Celsius claim at 30%, and somebody says, well, could be a buyer at 29%, that becomes an option for the seller to consider. Whereas if somebody says, yes, I'll meet your 30% at where it's offered, then you have a transaction in hand and you get funded in 48 hours. Part of what encourages the over 35 investors that we have on the platform to participate is that they know that there's a firm offering ready to go if they click the button at the offered price for the amount. Ordinarily, many of our investors wouldn't be interested in relatively small claims, $1 million or less in some of these transactions. Many of the investors are multi-billion-dollar SEC registered funds for family offices, and with pre-approved documents and a firm offering, and literally them clicking the button to execute, it opens up a whole new world of possibilities for investment that individual creditors don't have, and for that matter, the investors don't have without the platform.
So I think the only obligation a seller has on the claims market platform is to remain listed for 10 business days at their fixed asking price. So if your asking price is 28, you have to be a seller at 28 cents on the dollar for those 10 days. And so if an investor bids 25, you don't have to accept that. You can if you choose to. You can counteroffer if you choose to. But in the event that an investor steps up and wants to buy a claim at the 28 cents where you listed it at, then you're obligated to sell at 28 during that 10-day period. At the end of 10 days, then you can delist or extend your listing, whatever you'd like to do.
And one other point, just a clarification that many people don't quite understand, is that there are never any fees or costs to the seller on the platform. The buyers pay a small fee to be on the platform, fully disclosed. And so there's really no downside to a listing on the platform. And the other option that sellers have on the platform is if they list at an aspirational rate and nobody meets that price, it's almost like listing your house for sale. You always have the option to list it lower and see if that creates more interest as well.
Exactly.
I think one additional question coming in that's worth mentioning is, when selling a claim, does the creditor have to make their information public?
Yeah.
Or is there a way to,
Don't say yeah.
Yes. So why don't you take that one?
So the question, in case the audio didn't come across, is in selling a claim, and again, the intent of this webinar was not to promote or discuss claims market, but those are the questions that are coming in. The question is, does a seller have to disclose their confidential information in sale of the claim? And the answer is absolutely not. You'll see that the listings on claims market are confidential. The identity of the seller is not generally disclosed. Obviously, once if there's an accepted purchaser of your claim, they get to find out who owned the claim because they now own it. But there is no disclosure to anybody else. It's completely confidential. The only information that's available is the amount of claim for sale and the offer price.
Yeah, so all the personal information is redacted. So the market at large, they'll see redacted information with no personal details whatsoever.
And that same person is asking, if they were to decide to sell their claim,
would they be able to get paid in cryptocurrency?
I think the answer is probably depends on the buyer. But we've spoken to some buyers that have cryptocurrency accounts, and they can close and pay in crypto. Other buyers, just being, as Bradley mentioned, SEC registered hedge funds, don't have crypto within their mandate. So I would say most likely yes, but it depends on the investment mandate and capabilities of each buyer. We have one more question from IO, who's sort of revising the previous question, saying, is it possible to sell an account that has regular earned balances as well as a loan? And I'm just going to take that one, Brad, and say, first of all, just you can always, anyone on the call can always message us, privately, and then we'll be able to answer your questions in detail after we have more time to think about it. But just without knowing anything more, without seeing any of the details of your account, just reading your question, I'd say probably not, because my understanding is that unless you have more than one earn account, it's all one earn account versus a loan, then the entire balance of that earn account was collateral for your loan from Celsius. And again, if I'm wrong, let me know. If you have multiple earn accounts with different identities or different account numbers, then they may be insulated from the earn account that was provided in collateral.
Speaking of accounts, we've come across creditors who hold accounts that were not specifically identified in terms of use, with hold accounts, withdraw accounts, as well as under review accounts. And people ask, what the value might be on those types of claims, what our perspective is on those claims. And, because those identifiers were not in the terms of use, we just don't know at this point. We are working on it, trying to better understand the status of those types of accounts. But right now, we don't have a firm understanding of whether they're going to be treated as custody, whether they're earned, whether they're loaned, or somewhere, in between. And so, working on that, a lot of kind of issues that are works in progress, and status of that, those types of accounts are also in that status. So we have a few minutes left, and there's a lot of questions to go through. Vladimir and Brian are going through them because from this distance, I just can't read them even with my glasses.
So just some quick additional clarity. So the face value of the account is being, July 13th using the cryptocurrency price as of 10 p.m. converted to US dollars, and then the purchase rate would be based off of that US dollar amount. So I hope that provides some additional clarity for the questions that are coming in.
Yeah, for example, if hypothetically, if Bitcoin was $50,000, Bitcoin, it held to Bitcoin on July 13th at 10 p.m. You have $100,000 of Bitcoin, which is now a $100,000 claim in the case.
Right, and that's Mario Foti's question.
And so when we indicate that transactions getting done at the 25 to 26% range, if your claim is now valued as a face amount of claim at 100,000, the purchase price in that hypothetical or the 25 to 26% range would be $25,000 or $26,000 of cash or in kind payment.
Right. But just to keep in mind, that's just a notional amount for just as a trading convention. So if crypto continues to trade up, all things being equal, the cents in the dollar value of your account expressed in US dollars as of the July 13th petition date will go up. So it doesn't cap your recoveries, it's just simply a yardstick. And when you think about it, it's really the most rational, reasonable way, because it would be too confusing to look at pricing if you calculated it for each different point in time. If you use, a floating crypto price as of August 10th versus August 20th versus September 15th, the pricing would jump around and it would be difficult to really rationalize the pricing back to one metric. So we use, as Bradley and Brian mentioned, we use just an even predictable yardstick, which is your coin balance times the coin market cap price as of 11 p.m. on July 13th. And then, so that's the fixed notional amount, and the pricing fluctuates based on case developments, crypto, etc.
And it's not our arbitrary determination of value, it's what the bankruptcy code provides, fixing your claim as of the filing date.
Then one question coming in from John Email. He's asking, when we file a proof of claim, should they be putting down a U.S. dollar value or the value, in cryptocurrency?
So it's a good question. I think if you're able to either convert your crypto holdings into U.S. dollar amounts, or you can attach a screenshot of your account of your holdings, and it'll, the court will determine the value of those holdings. Either way, you're kind of putting your stake in the sand, saying, "I have a claim in the case. This is what it is," and then that becomes the debtor's responsibility to either accept or reject or dispute that amount. And so, again, it's why most attorneys would recommend or suggest that the filing of a proof of claim is a better strategy than waiting and potentially missing the bar date or forgetting about the bar date.
And then David Texford is asking what factors contribute to the percentage rate they could potentially get through the claims market. Probably, as you can just distilling from some of the points you mentioned during the call, Dave, but again, it would be important not to have an outstanding loan balance. That's number one. Number two, at this point in time, until there's more clarity on how the case in the court will handle net redemptions, it would be very helpful not to have a net redemption. So if you were moving assets in and out of your social account 90 days prior to the bankruptcy date, to have to be in a net contributor as opposed to a net redeemer status, and if there were redemptions, just to have those relatively small compared to your loan balance. But again, if you need any more information, feel free to contact us directly.
And just as a clarification, we don't set the market price for claims. The market sets the price. We have over 35 investors who are competing to be the best bidder for the purchase of these claims. And so it's whatever the market will bear is what establishes the market price for these claims. If a particular bidder came in tomorrow and said they want to buy claims at 50 cents on the dollar, that's where the market is. If nobody steps up except one bidder for 10 cents on the dollar, if there's bad news that comes out, that's where the market is. That's how the market is set on the platform.
Any additional questions, Vlad?
Let me just
getting the email reward.
Let me just check.
And, as our audience can tell, we try to be fair and unbiased in our analysis and discussion. We find that it's the right way to do things. And if anybody has additional questions that they want to have us address privately, we're always available, whether it be by telephone, email, or any other social media sources.
Okay. Maybe just handle one more. So Mario Foley is asking, if the bid side is quoted 25, maybe potentially up to 27, is as a seller, what's an appropriate upper bound that he should consider listing at? You know, is 30 the right number? Is 35 the right number? How would you advise, Mario?
Yeah, so obviously, it's based on different market conditions. We don't want to price a claim too high to disencourage potential investors from bidding on your claim. But if the current market is at 25 cents on the dollar, and you wanted to list at 30, 32, we think that's reasonable. And then within that 10-day period, if an investor looks at your claim and says, okay, I like this claim, I can't do 32 or 30, but I'm comfortable purchasing it today at 28%, we would let that seller know immediately. And then at that time, they have the option whether to accept or reject that bid. So the seller is always 100% in control.
Yeah, and we're happy to list claims as something that's slightly aspirational. It's kind of like listing your house for sale, to use that analogy again. You want to list the price of something that's reasonable, but something that people are going to have to step up to and enable you to consider counter proposals. Same thing with Heather. Same way the platform works as well. It creates definitely efficiencies for both buyers and sellers. It results in the buyers being able to efficiently purchase smaller size claims that they wouldn't otherwise be able to purchase, and sellers are reaping the benefit of having multiple bidders, multiple parties compete to be the purchaser of their particular asset.
Okay, so we've got a couple more. So Ryan Chen is asking what will happen with Celsius's illiquid assets, and so that the answer to that question is related to some of our earlier points on the distributions out of Celsius to holders of Celsius claims will happen over time in a series of installments. So for estimate purposes, at the end of the case, prior to plan confirmation, there'll be a disclosure statement and a plan of reorganization that will estimate recoveries at a point in time. So if there's an illiquid asset that's not sold between now and, let's say, late 2023, the professionals running the Celsius case, they'll estimate the value, and the estimated recoveries will include that estimated value of the non-liquid asset. But if it's unsold as of late 23, let's say the first distribution is December of 2023, then obviously that value will be available to be distributed. And so eventually, if the asset is sold, let's say in June of 24, whether that price is higher or lower than the estimated price, then the value will be realized at that point in time, and subsequent distributions will be made to creditors. Also, the litigation assets, whether it's against Tether, we didn't really talk about this or beyond scope right now, but I think it's obvious to everyone that that insiders, directors, and officers of Celsius have meaningful liability, as well as insurers have meaningful liability to Celsius, and so it's very likely there'll be value coming back into Celsius from directors, officers, and insurers. But typically, those lawsuits, they have to go through a whole process that spans several years. And so in the out years, there'll be additional value coming into Celsius. So that's why we made the point that the first distribution, let's say late 23, that's just the first of what's likely to be a whole series of distributions.
And then if the seller receives, if a claim holder rather receives a distribution, are they still able to sell their claim after they receive that first distribution?
Yeah, there's no issue there. I mean, it would simply be a net price. Let's say terminal recovery. Let's say a distribution was 5 cents on the dollar, and let's say claim pricing hypothetically was still 25% at that point. Once the 5% distribution was made, the net payment to purchase the claim would simply be 20 cents on the dollar. And so, transactions and claims can be done in most cases at any point in the course of the case.
And then the creditor would keep that initial distribution from themselves.
Yes,
They don't
exactly.
have to send right to the buyer or anything like that. That's their money.
Exactly.
Kevin, Chase Crimmins has a question or a point about the potentially fluctuating value of creditor claims. In the event that the claims are denominated in crypto, and so that kind of goes back to our earlier point of there is a mismatch between Celsius's current assets that are denominated to a small degree in dollars and various different crypto assets, as well as its claims. And obviously the claims are all originally crypto claims. And so if you had a claim denominated in USDC versus ETH, the value of your claim, the face amount of your claim, could fluctuate relative to a dollar asset or another cryptocurrency. And so it becomes very difficult to balance that, which is why it's highly likely that all of the claims for distribution purposes will be notionally converted into one currency, most likely dollars. And whether or not there's a crypto distribution, that the liability side of claims from Celsius's perspective will be fixed in dollars. And again, we obviously have a pretty strong view that there's likely to be a dollar denominated distribution on assets that are nominally valued in terms of dollars, even though they relate to crypto originally.
It's been a really good discussion. Do you want to take some more balls or?
Let me check. We definitely want to do what's right for the audience.
Are we losing audience? That's probably the ultimate guide. And of course, as I think I mentioned, if anybody has other questions that they'd like addressed, we're available. Between myself, Vladimir, and Brian, I'm not sure there's a team out there with more experience in bankruptcy claims, and we're happy to share our perspectives.
Okay, so
One more question.
I think there's just maybe two more that just came in late that we can just maybe address those two, right? And wrap it up. One question is from First Last, who asked about what time of day, 10 p.m. or 11 p.m. on the 13th. So what will happen is the court will approve a conversion rate at some point in the early stage of the case, probably between now and the next 1 to 3 months. There'll be a claims bar date set at the bankruptcy lingo for a deadline to file your claim. There'll be a standardized Celsius proof of claim form. Right now, creditors have been using generic forms, which are perfectly legal, but they might not be specifically tailored to the case. So there'll be guidance on exactly what conversion to use. The general rule is in non-crypto cases has been to use exchange rates as of sort of the market close, but obviously crypto's 24/7, 365, and so we don't know for sure, but we think it's best to use a time that corresponds to the time of day of the actual filing. So if you go on the Stretto Celsius site and look at the first few documents filed, those are the petitions. So the bankruptcy case began when those petitions were filed. And if you look at the top of the page, there's a timestamp. I believe the first Celsius case, if memory serves, filed at about 10:59 p.m. on the 13th. If you go on CoinMarketCap, it's denominated in hours. So we think 11 p.m. is a good approximation. But again, that's our estimate and the estimate that our buyers have been using. So we have to wait for an official court estimate.
In the meantime, I think it's going to be very close.
I think it's pretty close. Yeah. And then maybe the last question, and then we'll wrap up, is IO is asking about the claim form. There's preferred classes, and I don't think any of those preferred classes, like for security interests or administrative claims, we don't believe that any of those classifications apply to a Celsius claim.
But again, you can't provide legal advice.
It's not legal advice.
You might want to check with your own counsel, but from our perspective, I would agree with that. Yeah, so really appreciate you joining us today. Any questions, don't hesitate to get in touch with us. Brian, any closing comments?
Not really. We're just here to help the community. So even if you have some questions on filing the claim, we're happy to jump on a 5-minute phone call with you just to answer some simple questions and to walk you through the process.
Let us know how we can help.
Thank you for your time.
Appreciate it.